comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
That's what brings the viewers back. That a boy.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
Good morning, everybody. It's Thursday, August 7th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets are at September corn up 4 1/4 at 384. September soybeans were also up 4 1/4 at 969 3/4, and September Chicago wheat was up 8 1/2 at 517. Had a couple of export sales announcements here this morning. 106,680 corn to Mexico for 25. Also announced was 105,000 metric tons of corn to Guatemala, also for 25. Weekly export sales were announced here this morning. Corn sales, old crop, 170,428, a little below estimates there, but solid on the new crop, 3,163,153. That was significantly higher than the upper end of the range there. Soybeans, 467,842 for old crop, above the estimates. 545,000 there for new crop, which was in line. A good solid week on the wheat side, 737,831, which was about 150,000 above the top end of the range there. Meal sales in line, 169,393 for old crop, 112,368 on the new, and for oil, 7,000 for old crop, 29 on the new crop. With that, good morning, guys. What we know here this morning, so there's some positive talks between Russia and Ukraine. President Trump teasing this morning and yesterday afternoon that we could be on the verge of a meeting with both leaders from Ukraine and Russia, in addition to President Trump. So we'll have to see what comes of that. It'll be nice to see some good positive news there. And then I guess we'll talk about it here this morning, but just solid new crop sales, so we can continue to see real good export pace on the corn side. With that, Dustin, maybe kick us off here with a few thoughts, and then we'll throw around the room.
Yeah, huge sales, which is great to see as we're falling down to new contract lows here recently. And, over 1.2 million metric tons to unknown destinations for new crop corn. Market's clearly taking notice the last couple of days and this morning as well. We touched below $4, and, we've talked a lot about where the incentives are for those that have the higher insurance policies, even just growers in general. I did get a comment yesterday. Not everyone has a 95% policy. In fact, most people don't have a 95% policy. That's like in the past, it's 5% of the RP policies sold are going up that high, estimated. So, see the question on that front would be, well, where is the biggest pain point for the U.S. grower? I do think this is a bit different for the situation you're in. If you've got a 75% insurance policy, for example, and you don't have a lot of base acres, or you have a cap problem, there's a much different risk situation for you probably than someone that bought up to a 95% policy. So you kind of play to your area. I've been getting a lot of, just text messages from growers the last couple of days that are finding a little more problems than they thought, in different areas. That's anecdotal. I think as we saw these estimates come in yesterday for this report that's going to be released on Tuesday next week, everyone's projecting a pretty high number, right? StoneX is the first one to put out, the big number, the 188.1 or wherever they're at. But 184, 185, a lot of people are in that camp. We've had a great summer for weather, for moisture, but we have had a lot of variability in temps, and maybe that could explain some of these pollination problems we're seeing, or some of the tipbacks issues we're seeing as well too. So I just want to kind of keep an open mind. I don't want to be overly opinionated about where corn could go. I think there's been enough times where we're surprised when we think we have a bunch of coverage, and then the market rebounds for unknown reasons too. 2020 is probably the best example still.
Sure. Justin, anything to add there?
No, I agree with Dustin. I think, it's true that, everybody doesn't have 95% coverage levels, but that was, that kind of depends on your marketing. A lot of people that bought up, that was their put option, right? Subsidized corn put from the government. So it depends on your overall, how you want to allocate money to hedge. So when we use that, that's what we used a lot for this year because it was subsidized such a high level this year. So although typically before this year, maybe that number was 5%, roughly. I'll be curious to see when we get the statistics on that. I bet there was a significant jump this year in ECO because of that huge increase in subsidy levels. So again, it just depends, I think the combination of, if you had lower coverage levels, but you had more put options or you had more sales on because of that, I think you got to factor all that in together as that, like we've been talking about, what's the overall position that you have and just really understanding what that is and how it's going to perform, whether no matter what your insurance levels are, what you elected for Farm Bill, what your base acres are. Like, I think that's just so important to factor all that in and see what your position is. Cause that's really what you're trading is what you do have a position on, whether it's crop insurance, hedges, like you have a long position in the field and you have some sort of hedge position between all those different factors. So understanding that's super important around this time of year as you go into October 1st. Besides that, yeah, we talked about it. You're basically back within a penny of where we were before the 188 StoneX, number that upset, thousands of farmers. At the end of the day, it doesn't really matter what anyone puts out. Market's going to go where it goes. That we broke right into huge corn demand, which is super positive. And we saw it from a lot of different buyers, not just one, kind of frame contract deal or anything like that. It was, a lot of different buyers spread around, which I think is also encouraging. So we're getting to really good value areas, and we're in the month of August where we tend to put in a low at some point. So maybe some of the panic around, how big could the corn crop be? At some point we'll overshoot it. I don't know if it was yesterday or if it's, a month from now, but at some point we'll probably overshoot the size of the crop and, be too pessimistic on demand. And here we are, we're hitting really good demand numbers. I think there's some good questions out there on the crop size. And like I said before, I'm looking forward to kind of the groups that go out every year and do these crop tours. I'm personally looking forward to seeing what they come back with, and you'll get some real numbers here. You can only do so much from satellite data and crop conditions. You can drive by, and I've driven by plenty of acres of corn that looks great, right? Until you get in there and peel back and see what you actually have. That's kind of what I care about at this point.
Yeah. So I've got to, it's usually every couple of weeks. So I bring up wheat because nobody really wants to talk about wheat, but it was nice to see it as well. I mean, like corn, you break into a little bit of export business here. But, I'll tell you, you get that, you start looking at, the front end of wheat, and it's pretty bad.
Yeah. It's just been a dog for so long. It's, you kind of try to put in seasonal lows around like June. That failed. Made new contract lows yesterday as well. So, yeah, like we talked about, previous episodes that, when you get into these big carry markets and the funds are short, they get paid a dividend to stay short. So until you get something that can shake them out, until you really start putting pain to them, they earn so much money being short, by selling, being short the near end and then rolling to a much higher price every time they roll. So until you can break that, it's hard to shake that trend out. The only way you do it is you break into demand, you get the front of the market to catch a bid, and that's the way you turn these markets around. So definitely encouraging. That's kind of step one of what you need, low prices to cure low prices, right? You start attracting more buyers and you become the cheapest. So definitely encouraging that we're finding support. The worst case scenario is you break and there's no one there to buy it. So we're not seeing that, which is good.
Yeah, very good. Ben, why don't you wrap up a few thoughts here for us here this morning?
Yeah, good to see the demand. We need that. with, whether the crop is 183 or 189, we need that demand. And I wouldn't expect that we're going to just run away. We also have probably a little short covering before the August WASD, but at this point, yield analysis is somewhat conjecture until people get out there. Justin's mentioned multiple times about the satellite data and the estimates based off conditions and all the other things, but I think boots in the field will show a difference. And from what I'm seeing so far, I think we've probably overshot it a little bit, but ultimately we're still going to have a ton of volume of corn that's going to have to move. We have lofty export projections. So we're gonna have to, in order to keep the balance sheet where it stays interesting, we're gonna have to see more of that. But again, this is that time of the year where you kind of have to be on alert. I do think the SEP there's a lot of basis contracts open in the SEP, and I'm gonna say probably to a certain degree for good reason. So I still have my eyes on first notice date for SEP here at the end of the month as being a pretty critical place on the calendar.
Very good. Appreciate that. Real quickly, we'll move over here to livestock, where I saw some cash trade a couple bucks higher yesterday, and then pretty mixed in the hogs. So I guess share with us your thoughts here this morning.
Yeah, higher cash trade definitely kind of propelled things yesterday. I think it was not exactly a shock, but just, once again, just you kind of fed the bull a little bit more here. So cash a little 237 on the FCE, that's up $2. And I think they, at least from what it looks like, there's still quite a bit of optimism here just to how the north shapes up. And I think asking prices still in the south, Kansas, going to remain around 238 to 240 for the balance of the show list. But we've seen this massive uptick in beef. We've seen almost a $10 rally here in choice and select just the past several days. So it just feels like Packers getting a little bit of margin possibly back here, easing up a little bit. So we got a little bit more money to throw around on the cash side, and futures are responding. We've almost taken back the entire bit of losses from last week and are on track to make new contract all-time highs before the end of the weekend. So I think that right now that trend looks to probably stay here for the moment. And there just isn't any bad news. It's just everything seems to be pretty supportive here. And even on the weekly export side of things at 15,900 metric tons, this was, overall, that's pretty strong. It was up 88% for the previous week. So we are seeing, it just seems like demand is not even backing off at these price levels. So still probably more to come. I mean, obviously we're overbought. This is a great opportunity just to lock in, some kind of floor coverage. I mean, going all the way out till, April or even June of next year, I think the prospect is there. The prices look great. And it just seems like that's a good place to start for now. So we've been kind of eyeballing that past couple days here. On the hog side of things, a little two-sided. You did make a new high for the move, but carcass coming in a little bit lower here. Belly's down $3. Just feels like you're probably going to start to stabilize this move a little bit here. And with cash prices just kind of holding firm at 113.77, it just seems like if the trade's really been focused on kind of the momentum in bellies, we probably see a little bit of choppy kind of weakness today. But overall, it just seems like that market's gained quite a bit of steam. And right now, we are kind of at this seasonal crux, right? I mean, usually we see cash prices start to dip. And right now it looked like the real support came in the October, trying to bring that discount up a little bit. So it looks like things are probably looking to stabilize kind of towards the end of the week.
Very good. Appreciate the update there. One thing to note, tomorrow is Friday. We've got a very special Fun Fact Friday for everybody. Jack will be handling the Fun Fact Friday, and so I'm told that it could be pretty interesting. So be sure to tune in for that. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day. We'll talk to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.